At $6 a pound, there is no projects outside of Indonesia, that can move forward. If they want the nickel, they're going to really need to provide the guidance to the market as to how much nickel the market, they're really going to need to be able to help shift the investment community to be ready to write a check to the mining companies to be able to build these projects.
Hello and welcome to Crux Investor. First of all, thank you so much for watching this video. If you like it, give us a thumbs up. That helps us understand if this is the type of video you'd like us to be making for you. And also do leave your comments below. That helps us understand the sorts of questions you think we should be asking. I think we've done, and of course, what you thought of Mark Selby's Nickel Insight. You can also catch this as a podcast, an article, or a transcript on cruxinvestor.com. And for our Crux Investor Club members, you get early access to this video. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We spoke earlier today to Mark Selby. He is a nickel market commentator, also CEO of Canada Nickel Corp. They're on the TSX-V with assets in Canada, 11th largest nickel deposit in the world, no less. We talked to him about market fundamentals, what China is doing to stimulate their economy, the impact that is having elsewhere in the world. We also talked to him about some questions that have been sent in by viewers. We cover a lot of different topics in there, some great questions from some of you, so thanks for that. So take a look at the description below at some of those elements. Anything interesting in particular, you can click on the number beside the topic. That's called a timestamp, and I'll jump you to that part of the video. Otherwise, sit back and enjoy what Mark has to say. Mark Selby, how are you doing, sir?
Very well, Matthew Gordon. How are you?
Not bad, not bad. But then I haven't had the kind of car journey you've done. So tell us all about it. You told me before we started. I was impressed. Where are you?
Yes, I am in Timmins, which is a 8-hour car journey north of Toronto. I had stopped in Sudbury on the way up, and got up here. Again, it's trying to minimize contacts. Things in Ontario are pretty good, but it's safer to drive than to fly at this point. So rather than take any additional risks with contact at home with some higher risk people, I got to see a good chunk of Northern Ontario that I hadn't seen before. So.
Well, I guess that's rather gorgeous, and a lot of thinking time, a lot of phone calls made, I suspect. But yeah, okay, that would be like the entire length of Britain and some, in fact, a little bit, about an hour north in the sea. So that's always impressive. Okay, well, we're here to catch up, weekly catch up, what's going on in the world of nickel. We've talked for the last 2 weeks about fundamentals. We've also talked about price in the market, and this week has not disappointed again.
Yes, nickel continues to surprise, and I was wrong once again. What we'd seen the last 4 to 6 weeks, you've seen some momentum stuff come in. Last week was obviously the Elon Musk comment that popped nickel prices up about 4%. And then, just yesterday, in the last 72 hours, nickel prices have moved up another 4 or 5%. And in this case, we're finally seeing some real fundamental numbers come through. What was amazing was Chinese stainless steel production. And again, 2/3 of nickel goes into stainless steel. So that's the big number. And China is about 2/3 of all stainless steel these days. So their year over year 300 series, which is the one that has the most stainless, that has the most nickel, was up 17% year over year. I know I've sort of ranted on a few prior conversations about analysts, sort of being very nervous about stepping away from a 2% to 3% growth number. The reality is in nickel, it has these kinds of moves. So, all of a sudden, people's demand forecasts for nickel, and then, which are going to use this year as a base and then go forward, if all of a sudden the base is going to be materially higher, again, the amount of extra nickel that will now need to be consumed in an analyst forecast is going to be raised by several 100,000 tons over the next 4 or 5 years. So, and again, I don't think this 1 month's a blip. The good thing is you've seen stainless prices go up during that time frame, so people are really demanding it. You're seeing inventories drop. So again, there's a whole set of now fundamental numbers that are finally pointing in the right direction. We didn't see those fundamental numbers showing up which could suggest that there's sort of a bunch of hidden stocks that are taking care of whatever additional demands coming through. And maybe that was the case, but now obviously the call's gone out. In terms of the nickel market, the other part that's constructive, in terms of where we are at this point is you're seeing ore prices also move up with the stainless price, the nickel price, and the ore price has moved up. If there was enough nickel pig iron floating around right now, the NPI producers wouldn't necessarily, be bidding up ore prices to produce a bunch more. So that suggests, things are, they're buying more ore at higher prices because they need to. So again, these moves are good. We'll see how the fundamentals sort of hold up here, but. Again, holding if we end up with between 625 and 650 through the end of the year here, then that's a great position for I think what's coming down the pipe.
So what's happening in China? What is happening in China? Because there's a lot of stimulus, but they're coming at it a different way from the West, where we're just helicoptering money in and dropping it, scattering it in a kind of very random fashion. These guys seem to be driving it towards infrastructure, manufacturing, and obviously primary industry we're seeing here. Because if I look at 17% year over year on the Nickel 300 series, that's nuts. I mean, that's insane. So what's happening? Yeah,
no, it's again, the Chinese, the way they reflate their economy is to, basically, get a bunch of infrastructure built, get a bunch of housing built. Again, social housing is a big driver in China. And so, again, we see the East Coast, which is very well developed now, but there's still hundreds of millions of people who still haven't, fully participated in what Shanghai and Beijing look like today. So, again, the overall macro theme you see in a bunch of numbers. So, copper semis production, they're running at 101% of capacity right now. Year over year, steel production, is in very healthy, growth territory. So, they've done it, as I said, 2003, 2008, 2009, there's been a number of cycles, where they've come, this is the button that the Chinese government hits to try and build up their economy. So, this is going to continue, for a good 6 to 12 months, and perhaps longer. We'll just have to see sort of where the Chinese economy lands.
We'll also be able to work out who got it right in terms of their approach to stimulating the economy.
Yes.
Which is a fascinating one. I think we're going to talk to a couple of US funds about next week. But prices are up, inventory's down. Imports on the rise. Where are they getting it all from?
Yeah, I mean, right now it's just the Philippines, and so that's again the catalyst for the end of the year is they need to build inventories because the Philippines has their rainy season from November through February, and if they haven't built their stockpiles up, things will get even tighter at the end of the year. There's news yesterday. New Caledonia approved 2 mines, Goro and another mine, to export about 2 million tons each of ore. That will work out to, depending on the grade, 50 to 70,000 tons of additional nickel ore availability. But again, we lost several 100,000 tons of ore availability from Indonesia when they put the ban in place in January. So, it will help a little bit, but it's not going to change the fundamental picture. And New Caledonia is really the only proximal source of large volumes of additional material. So if kind of that's it that can come to the market from the biggest potential supplier, then that's a good sort of medium term view. You may see some additional quantities from West Africa, Guatemala, and a couple other locations, but again, there's not there's not another Indonesia out there waiting with ore ready to go to China. So yeah, again, it really does help the end of the year picture and into 2021.
In New Caledonia, that's 2 times 2 million, so it's 4 million tons into the market, but it doesn't touch the sides. If Indonesia continues with this ban on exports, things are going to get tight for sure. Is there any chance that the Indonesians say, well, actually, we're going to come back online here. We are going to be able to supply into the market. Is there any chance of that?
No, I would be zero. Again, this has probably been the most successful developing country mining investment program ever. They've literally seen tens of billions of dollars of investment pour into the country. Again, I would love to see someone put a chart together of what that investment looks like over the last 5 years, and they've got to be top of the list in terms of attracting investment. So, they flipped themselves in 2014, and that was really in response to a short-term issue where the home team player PT Antam, who the government also owned, was really struggling to produce enough ore to meet Chinese the demand from the plants that had been built at that point. And they pulled the ban forward this time to make sure that they were going to get the investment that they wanted. So I think there's zero chance that they would flip it, flip back at this point in time.
Okay, well, let's talk about where the demand's coming from. You mentioned a few other places that's going to come from, and you've got lots of different grades and scales of operations and so forth. But something you mentioned in the past, it's a question been sent in. We've talked about intermediate material and how that may be a solution for this demand that's coming down the line. So can you just sort of remind people what the intermediate solution is and perhaps how that could affect the market?
Yeah. So over the next 3 or 4 years, as capacity starts to get built to continue to supply the EV market, what you're going to see and what makes most sense from the supply chain for the auto industry, what's the lowest cost to get it out of the ground and into an EV, is to really make the highest quality intermediate product that you can from either a laterite or a sulfide deposit, and then take that product and then put it into a plant that then takes it down the path into a product that's much closer to what can be used for the auto company. Again, there's two main reasons for that. One is if you're going to make a nickel sulfate, there's a huge amount of a big portion of the cost is crystallizing the sulfate out of solution. You use a massive amount of energy, and then the first step in the next process that uses the sulfate then redissolves it all again. So, and again, in terms of that end-to-end cost, that's a very wasteful step. The other piece of it is, again, a lot of nickel intermediates. In the laterite side, you can have material that's 45 to 50% nickel, and other ones that are 65% nickel. But a pure nickel sulfate, just because you stick a bunch of it ends up effectively water molecules in there, it's only 22 or 24% nickel. So again, if you then have to ship it somewhere, it's much more expensive per unit of nickel to ship that material around, and all you're doing is taking a bunch of sulfate out, paying for a bunch of sulfate ions to travel around the world. So for those two reasons, the companies that I've been discussing, that's very much conceptually sort of where they see the industry going. And so again, I think producers who are looking to get into production over the next 3, 4, 5 years, that needs to be kind of where you have to head to.
So we've interviewed a few companies recently who are looking to, because the market's tightening, and they're seeing the ability to capture value further down the supply chain. Nickel is seemingly quite an expensive industry. Just the mining component, you need to raise a lot of capital. The capex is vast. Are there solutions that you think you're looking forward? And this is stimulated from a question for someone saying, well, is there innovation that's going to come into the nickel space from the likes of people like Elon Musk with that comment last week, where saying, well, there must be a more efficient way to capture nickel to be able to provide high grade nickel to battery manufacturers. Are you seeing much innovation? Are you seeing people wanting to move down the supply chain, or just is it miners focus on mining and processors focus on processing?
Well, again, there was a whole flurry of people talking about making nickel sulfate, at the mine site or somewhere in between. Again, I think, if you're in production right now, you still have to sort of avoid the cartel, that the oligopoly that really manages nickel supply. So it is good to have some sort of downstream path, but again, don't build the plant at your mine site. The industry is definitely talking about it. That's where they want to go. I think it'll be the next generation of plants that get built, will be sort of built with that concept in mind. Again, the challenge for them is, there aren't a lot of intermediate, again, it's a bit of a chicken egg. There's not 50,000 ton a year nickel production plants coming online outside of, or mines coming online outside of Indonesia. So, and the Chinese are, busy basically getting their plants in place in Indonesia, so that they're going to own the entire chain, right through to final product. And so it won't be available to Western suppliers.
So talk to me about this next generation of plants. I mean, what do you mean? What are they going to do that the current plants don't do?
Yeah. So again, right now they've been quite happy to buy sulfate from Glencore, Vale, other producers. But again, right now we're just in the baby stages of nickel in the EV market. It's basically 3 or 4% of overall nickel demand. And we're talking about going from 80,000 tons to 400,000 to 500,000 tons by 2025, and then 1 million to 1.5 million tons by 2030. And so they're thinking about, okay, how do I make the 8 times or 5 times the amount of nickel I need by 2025? And it's as they gear up to get that level of production in place, they're thinking about, okay, I was fine when I was buying 20,000 tons of nickel sulfate, but then when I want to, when I need 5 times that, then I need to start to think about what that cost looks like and how I want to position myself going forward. Because again, one thing that Tesla has been really focused on is just scale. The gigafactories are huge. They're built to be expanded even further, because again they realize there's a scale curve to this production. And so, they just want to make sure they're as far out in front of the rest of the pack as possible to be able to have a cost advantage versus them. And again, I think in the production of these, production of the products that are necessary for the chain, again, scale will help, because again, in the auto industry, it's all about, trying to be the lowest cost supplier and continuing to, modify your supply chain so it's the absolute lowest cost possible.
Okay, so talk to me about this oligopoly, because when you say words like that, it says, well, they can control pricing the market, they can control supply, processing, which may affect my decision making as an investor. So, was it sort of tongue in cheek, or do you mean there is something that we should be aware of?
Yeah. No, it's tongue in cheek, but the reality, 10 and 20 years ago, was you had a very small unlike copper and zinc, where you have benchmark treatment terms that are negotiated with some competitive tension between producers and suppliers. In the nickel space, there was really only a handful of downstream smelter refiners, and so they had effectively a lot of pricing power over miners in terms of who got what share of the profit from digging it out of the ground. That's been loosening as again, these alternative production channels open up in China. Pricing terms have moved higher, but we're still, we're only about 20% of the way down that path. Again, I think in another 3 or 4 years, you'll see a lot more capacity come on in China, to handle nickel intermediates, to get them into a form that can be used by the auto industry. This is exactly what happened in cobalt in the mid 2000s, and I expect a similar thing to happen in the nickel space here.
Okay, so there's a saying in mining which is he who controls the mill controls the district, right? Been around for a long time, right? So it's well known. Yeah. But there's something to it. Is that even more the case with things like nickel? And certainly we've talked about it in the context of cobalt, previously in copper. But is that the case now with nickel, or is there a bit more to it?
It was definitely the case like 15, 20 years ago, and in the past, the Inco and Falconbridges of their time. I mean, it really helped limit supply if you really, as a miner, couldn't really get a path to market for your product other than selling it to them, at a price that ensured they made a lot of money on it. Again, today that's less the case. But again, you have to, you need to further process your material to actually get cash. So, that's when I was with RNC, when we looked at Dumont, that's why we came up with this roasting approach to effectively, that gave us a channel to bypass the existing smelters and refiners to get material into a much more competitive market where there's dozens and dozens of nickel pig iron producers to take advantage of. That's, miners need to think that way, but again, over the next 3 or 4 years, that hold on the market that the existing players have is going to continue to diminish as these, alternate paths to market start to appear from China.
Okay, so again, just a few questions that have been sent in, by people who listen to the series. A lot of questions around the same thing, so I'm going to sort of paraphrase if I may. So,
sure.
People want to try and understand, what do you mean by, and in one case, would challenge your assertion around the need for forward guidance from the automotive industries. Shouldn't you be able to just stand on your own 2 feet and get on with it in a bear or a bull market? Why do you need guidance from the automotive industry?
It's, the reality is, and I was talking about it when nickel was $6 a pound, 650s it's better for the miners, but at $6 a pound, there is no projects outside of Indonesia that can move forward, at a $6 a pound price. Elon Musk, in his sort of set of comments, he said, don't wait for prices. One of them was, don't wait for prices to go back to prior levels. And that is a reflection of, okay, there aren't projects that can go ahead at the current level. They do need higher prices to be able to get going. And again, it's fine for him, who's not investing $1 billion in capital, to say, trust me, we're gonna use all the nickel you need. Just go ahead and spend that $1 billion and don't worry about it. If they want the nickel, they're going to really need to provide the guidance to the market as to how much nickel the market they're really going to need in that in the 2025 time period, the 2030 time period, to be able to help shift the investment community to be ready to write a check to the mining companies to be able to build these projects. That's the bottom line, and that's why I made that assertion.
Okay, I mean, it's interesting what you just said to me, because no companies outside Indonesia are going to be economically mining nickel for under $6. That's what you just said, right? Because you and I have been on the finance side of things for long enough, and we've done enough in mining to know when companies kind of splurge out their AISC numbers, those numbers can be manipulated to a degree. Okay, well, just say that. It's a big macro statement, not a reflection on any your companies or any companies I know, but I've been in rooms where that happens, and things can look economic when you're using AISC. So it gets really, really difficult when you've got companies that are saying, hey, we're economic at $5 nickel. But the underlying reality is that they need $6 nickel to actually be profitable. Okay, so that happens. Okay, and I'm talking about gold, I'm talking about copper, silver. All companies, play that game to a degree. So your assertion that no companies can economically mine for under $6 is, I mean, are there exceptions to this outside?
I wouldn't say economically mine. It basically get a project financed. So, again, if you need $1 billion, again, Voisey's Bay underground, Boy Valley is, $1.5 billion. Onaping Deep is Glencore's project. That's $800 million. Those are the scale of the tickets that are required to bring new nickel production. And so the cash cost, again, using Dumont, feasibility study numbers as an example, the cash cost is around $3 a pound. the all-in sustaining cost is well below $4 a pound. So again, they'll print money at a $6 nickel price in the future. It's just a matter of getting enough, getting $1 billion to be able to build the plant, to be able to, to make that quantity of nickel and generate a return on that $1 billion investment. But again, this is something you bring up the case of the C1 and AISC. I would really encourage investors. There's a bunch of the high grade is sexy, and it looks great. But I would really encourage investors, if you're looking at a high grade operation, to go to the free cash flow page, because the issue with a high grade mine is that you have the exploration cost. You then have to develop the mine to get out to where you just found the nickel that you just drilled, and that number piles up pretty quickly. And so they might say, oh, we've got this cost, and then we've got this cost, and you think, oh, there should be making $2 to $3 a pound, and then you go to the cash flow cash flow statement and you look to see actually how much free cash flow they generate, and none of it's there. Because when you do all in sustaining costs, that's one of those things where companies play a little shell game in terms of, okay, well, that's not sustaining capital, that's exploration and development. So we'll leave it on that side of the fence. So their AISC number looks lower. So, but yeah, no, that's it. I would highly encourage, people to do that. There's one example in the industry that, is kind of sort of very much, twisted the definitions of C1 cost, more than I think
we all know
a lot of
who you're talking
people
about.
would be comfortable with. Yes.
Yeah, I think let's definitely not mention any names, but I don't think it's unusual. It happens all the time. I see it across all commodities. It's the dance that the CFO plays, and that's why I think fundamentals have got to be there. You do, need to look through the MD&A.
The cash flow statement never lies.
Never lies.
That is the best of all of the financial statements.
Yeah. Okay. So maybe it's something we can pick up on another time. Just maybe help people sort of understand and go through that and what the actuality of some of these costs are. Next question was, and since you've come up with your NetZero trademarked pending concept, and you're starting to talk about it in the marketplace, and we've seen it everywhere. So you got some amazing coverage from that, from mainstream press as well. It's really good. People starting to come to us and talk about the difference between clean nickel and dirty nickel. And there's some are saying, well, sulfite's cleaner than laterite, and some are saying, well, some of the practices are cleaner than others. This whole ESG component is so important. Elon Musk said it was, so it's got to be true. Right. But I'm thinking, for example, of practices like, the what is the actual cost of trying to be a clean, responsible, ethical miner versus miners who don't have those problems in some jurisdictions where they've got deep sea tailings, where they're literally dumping stuff out into the sea, but at very deep volume, so it shouldn't be a problem. It'll be okay, folks. Right. How do you balance that off? Because obviously, with kind of lower ethics come lower costs potentially, and with ESG come higher costs potentially. So what's your take on it?
Yeah, and that's the thing is the opportunity, and this is why we wanted to be so far out in front of it. Is there are situations, and again, our projects there are other projects that have a set of have again an intersection of things that make sense that allow them to do it. When we look at the ability of the location where we're at with the hydroelectricity, and then the nature of the rocks themselves to absorb CO2, what we need to do to get there is, in fact, because we're starting out and we're going to design it in from the beginning, we'll really have, our expectation is as we go through the engineering here that we'll have, basically minimal to no impact on capital cost and minimal to no impact on operating costs. Every operation can't say that, but, again, it's those opportunities. And that's where people, one of the dimensions now, as you start to look at mining projects, is to say, okay, is it a good deposit? Is it in a good location? And then the next question, and again, I think if you want to really make a lot of money in mining, is to identify those opportunities where you can mine at zero or close to zero carbon going forward. It's an equal pillar in the pillars of what you need to look at as you look at new projects.
Right. So I know you have what you've got. There are other companies who have similar not capability. They've got similar situations, focus on similar situations. We're going to be careful. This is a kind of macro show, and I want to say, some companies are perfectly capable of achieving the same goals as you. Some a lot less so. They've got a whole different set of problems, and which I want to talk about because we must have like 40 questions here about clean and dirty nickel, and investing in ethical investing and what's going to get funded, what are institutions looking for. And you have answered some of those questions over the past few weeks. Are you getting much feedback as part of your NetZero conversations? What are people trying to understand about NetZero, and do they buy your version of it?
Yeah, no, to be honest, I think the feedback over the past week has been been very positive in terms of making that an objective. And again, I've had a number of conversations with a number of different mining companies and other groups in the last week and a half here, and I have not had any and again with people that I've known for quite a while and aren't afraid to tell me that I'm full of something on something, and again, I've had no pushback in terms of the concept itself, because there's not there's no rocket science involved for our particular project, and given the location that it's in, to be able to do that. There's a couple of engineering issues in terms of how you would take off gas and what's the right way to blend it in with the tailings. But other than that, as an issue, there's really not any kind of anything particularly fundamental at that point. And again, there's more operations now. You're starting to get more electric mining fleet become available. So again, for some underground operations that are going to an all electric operation, that opens up the possibility for those type of operations to be able to do it. So again, it's just looking for the right set of opportunities, deposit, location, and now it has to be net zero carbon potential as one of the key pillars as you look at projects that you want to get involved in.
So talk to me about some of the funds. We've mentioned in the past people like Cobalt and the BlackRocks of this world. Are they actively now seeking projects like yours, or making demands of projects which perhaps aren't but could be or should be? How are they affecting funding in the marketplace? Because they're slightly unconventional in a way, because they're coming from non-mining backgrounds, but they're seeing opportunities, kind of hedge fund-ish in their approach, and saying, well, if we put money into the right companies, but even we have standards.
Yeah, no, I think in terms of the larger there are more and more large investment funds that are ESG is part of the the large funds are deploying capital, and they have added that third column in terms of where they're valuing companies. So if you're a junior, if you're now operating in that industry, or you're being evaluated on that column, it would be good to take that column and put it into your day-to-day investment decisions. Again, with the energy metal space, again, cobalt is good to see sort of Silicon Valley money come into the mining sector and think about ways to try and find more, they're focused on looking at, trying to find other sources of nickel and cobalt, that aren't in the Congo and are other places that have some, political and environmental challenges associated with them. So, I'm hoping, and that, that is a sign of more capital to come from that space. We'll see, what happens over the next 4 months. It's been, I think we're at day 9 post announcement. So, it'll take a while for it to trickle through. But I'm hopeful as we go through the rest of the year here that, we should have some pretty interesting discussions with a bunch of investors that we wouldn't have been able to talk to before.
Okay. I don't like rumors, but I've heard one.
Yeah.
Orford, West Raglan, partnerships. What can you tell me?
Okay. No, the So yeah, full disclosure, I'm chair of Orford, as well as my role of Canada Nickel. Yeah, I mean, the reality, and I've said this lots of times, there are very few high quality, nickel sulfide projects globally. The West Raglan property we picked up at RNC in 2014 was our first, one of our first acquisitions of something else other than Dumont. So, again, we continue to look at all nickel sulfide opportunities, and if and when it makes sense for us, we will look at doing something with that nickel sulfide property. But at the current time, there's no, there's no deal on the table or anything like that. But it's a great as an Orford mining chair, it's a great opportunity.
Okay. I was looking for signs. Mark. You've got your poker face on, and I know you're a very good poker player, so I got nothing from you. Well, Mark, hey, thanks for this week's roundup. You kind of, when we first started talking about this, said, well, things don't move that much in nickel, in the world of nickel. We'll see how it goes. It may not last, but here we are, 10 episodes later. It's getting exciting again.
Oh yeah, no, and again, the part with nickel is, again, it's always been the most volatile base metal. So, again, I would encourage people to, not wait for the perfect set of indicators to come in place. The mid-May trade in the base metals that I said was the right time to step your foot in has been great. And again, now that we've got this, the moves over the last 6 weeks, 8 weeks have been momentum based. This is real solid, fundamental. There's a set of fundamental things that says this level is going to be interesting for a period of time. And again, we're now with New Caledonia just providing a little more and a lot more ore to the market. It'll set up an interesting end of year early 2021 time frame. So yeah, stay tuned.